Here's a summary of December 6th Bank of Canada announcement. I can think we're all going to have a sigh of relief that this is the final decision for 2023 from the Bank of Canada, and they did pause Bank Prime, which is great news for us. So the monetary policy is at 5% still. This is the third time in a row that the Bank of Canada has made a decision to pause on Bank Prime. I want to talk about some key highlights as to why that pause had happened. A lot of it has to do with where inflation is today in Canada and also the housing market. You know, the slowing Canadian economy is easing inflationary pressures. The CPI, which is our consumer price index for inflation, has dropped to 3.1% in October. A lot of that has to be influenced by lower gas prices, which is a great news for us. Shelter price inflation has eased, and a lot of it has been driven by rising rents, housing costs, and mortgage interest. In fact, mortgage interest attributes to 30.6% of the inflationary rate, which I've talked about many times in videos, that this is a big factor. And in fact, the government has used monetary policy in the last 2 years of the increases that they've made to ease inflation, but it's actually caused a lot of our inflationary rate because of the exponential increases that we have incurred as homeowners that have mortgages, and the interest rate really payment shock that we've all endured if we've been in variable rate mortgages. Core inflation measures have hovered about 3.5%, which is recent data towards the lower end, and wage growth remains about 4 to 5%. But here's the interesting news about inflation. If you actually look at headline inflation right now, we're currently sitting at 3.2%. But if we take out the metric of mortgage interest, we're actually sitting at closer to 1.9%. Now, you heard me right, 1.9%. And the government's target for inflation is 2%. So we're actually under where we were even prior to the pandemic. So what does this mean for us in 2024, and what is the forecast going forward? Here's some great news. All the economists and a lot of the business experts and financial experts have factored in decreases continually in 2024. You heard me, decreases, which is great news. So we're not talking about increases. There's no hawkish sentiment from the economists that the government will change that perspective because the economy is slowing, consumer spending is slowing. We're looking at commercial spending easing as well too with a lot of businesses because interest rates are high, and let's face it, it's all affecting our pocketbooks. So what is the forecast for 2024? When we're looking at the Bank of Canada, the actual dates for the announcements of Bank Prime, we actually have 8 that are set already for 2024. The first one is going to be on January the 24th. And when we looked at the actual forecast that a lot of the economists are saying what the Bank of Canada will do, there's about a 43% chance right now that on January the 24th, we may potentially see a 0.25% reduction already starting at the earliness of 2024. So I'll keep you posted on that. The next announcement after that, we actually get a pause in February, and the next announcement would be March 6th, which there's a 78% that we will see another 0.25% drop. Now, there is a bit of a difference in how much of a drop we will see in Bank Prime. I'm seeing that the majority of economists are saying from a 1.75% to 3% drop in Bank Prime. It's going to have to see how slow the economy continuously builds that over month, which I think we'll definitely see some more higher unemployment coming in January and February when more businesses are continuing to lay off. So I've always said we have to see some bad news in this economy to get some good news on rates and some relief on payment shock. So going towards that, mortgages coming up for renewal. We have over $900 billion in the next 3 years. And there is a very large sector of mortgages coming up specifically in 2024. So if this relates to you and you have a mortgage coming up in 2024, you need to make sure you're prepared. Contact us so that we can go through this with you. we have to let you know where payments are sitting at today. Now, great news is on the fixed rate side, we're actually seeing rates drop exponentially. Now, 3 weeks ago, we were closer to around 6% on interest rates. And today we're actually now under 5%. So this is fantastic news. And one thing that's very important right now, if you have a mortgage coming up for renewal, you would be receiving a renewal statement from your bank or financial institution, which would show mortgage interest rates at about 30 days prior to where they are today. Now, in the environment we're in today, this is great news where we can become very competitive now on interest rates and look at alternative options for you in terms of getting you the best rate at the time of renewal and strategies out there. You know, a variable rate mortgage was not one that we recommended a lot during 2023. But now that we're coming into a competitive space on interest rates, not only bank prime coming down in 2024, but fixed rates coming down as well, you're going to be in a great position for your mortgage coming up for renewal to make sure that we are on top of it for you to get you the best strategy and best rate for your mortgage for this next term to save you thousands of dollars. So there's great news going into 2024. We've reached the top of the hill of the difficulty of inflation. We're starting to see that target rate come back in line in Canada at 2%. Bank prime is going to be coming down potentially between 1.75 to 3%, and fixed rates are coming down as well. So great news overall. Make sure you reach out. I'll continually update you on where we are in the market, on inflation, on mortgage rates, and products that help you have your financial path of success.